in this video I'm going to be talking about why we draw demand zones and supply zones, but focusing on demand zones in the way that we do. And what I mean by that is there are some traders out there, and the majority of traders, that will draw demand zones from the wick high, from this wick high to this wick low. And I was asked by a trader why I draw my demand zone from the candle wick open to the wick low. And first of all, I just want to start off by saying that there is no right or wrong way. You do what makes sense to you, and both will have their pros and cons. Now, I have a philosophy, and my philosophy is, when it comes to supply and demand, is looking at understanding value and prices, and what's a bargain price and what isn't. So again, many traders will tend to draw their demand zones from the last bearish candle's high price and high wick price to the low price, and this is where the demand zone will be. Now, in comparison, I will draw mine at the candle wick open price to the low. So why is that? And it's for this sentence here: the open price is cheaper than the high price. The open price is always cheaper than the high price. And when we're talking about cheapness, if we look at this side here and we then go to and try to understand that in the overall range from what would be considered this high and this low right here, this high would be considered an expensive area. Why do we know that? Because buyers are no longer willing to push prices higher. So this is an expensive area. We know this to be a cheap area or bargain price. And why do we know that? Is because buyers came in at this price and pushed prices higher. This was an absolute bargain for the buyers. So now if we look at the actual zone and where we want to buy in the zone, the high of the candle compared to the open of the candle, which price would you say? And this is obviously, if we're looking at a price chart, this would be price and this would be time across the horizontal axis. So this would be price. If we were looking at the high price or the high wick price or the candle wick price, what price would you want to buy at? Or what would you say was cheaper? You would have to say that the open price is cheaper, and it's a cheaper price. So for me, while prices may come down to an area and you may draw your demand zone here and prices may work, was it the best price? Right? Was it the cheapest price you could have got in at? The cheapest price is obviously going to be at the absolute low. And this is proof of value. It's proven to be an absolute bargain area. Up here isn't necessarily the best price. It's a cheap price compared to, if you're looking at what is expensive. But if you're looking at this candle from the high price to the low price, the open price where I want to buy is cheaper and a more bargain price, than the actual high price. Again, there are pros and cons to both. There is no right or wrong way. What I would suggest is that if you want, you can always go to your price chart and you can plot out either method and see which one works for you. But if you're understanding supply and demand and you want to buy at bargains and value and cheap prices, and understand, my way of trading and the philosophy and as to the reason why I do, then this is the main reason why I will draw my demand zone from the last bearish candle's open price to the low, because I like to buy at bargain prices. Prices may come down here and go on their merry way. That's good for other traders. That's just not my trading opportunity. My trading opportunity starts from the open price to the high price, and also as well I can get a better risk reward the lower price comes down as well to the open price. If you're buying here, then you have to have a bigger risk reward when it comes to where to place your stop loss, whereas my stop loss is going to be a lot smaller in terms of pips, but I use obviously, but in case you don't know, I use risk percentage. So again, there are pros and cons to both. Sometimes you may get in early, and this one you may miss a trade. I'm not worried about missing trades because I'm not losing any money and I'm managing risk. I'm buying at a cheaper price down here, which is better for me. Some traders may want to try and get in early. I'm not too fussed. So again, there's no right or wrong way of trading supply and demand. Everybody can get, and profit how they profit. I'm not here to, to make the comparison. But if you feel and you want to know why I trade down here, or what is the better way to trade, then this is just an option, and this is the reason why I do. And someone who trades imbalances in supply and demand, drop based rally, rally based drop, I trade proof of value, may say to you that this is the area to start to look for demand. Again, everyone is entitled to their opinion, and I wish everybody the best in whatever way they trade. So yeah, that's it. Hope that helps, and take care.